Hello and welcome to Moose Meets, where I sit down with various protocols to explore their innovations and what sets them apart. And of course, we'll be digging for some exclusive alpha for you, so make sure to lean in and stay tuned to ensure you don't miss a thing. Without further ado, let's jump right in. Hello and welcome back to another episode. We're back again with Gearbox today. I have Ilgiz from product side and Ivan from marketing and BD. Hey guys, how are you doing?
Hello. Thank you for having us again. Different time, different people, but still same Gearbox.
Awesome, and excited to hear how you guys have been doing since our last call.
Pretty good, actually. Yeah.
Awesome. Yep, and of course, I think the biggest things that I've seen on Gearbox is bringing restaking on, right? But first, let's get into what restaking is and how you guys are bringing leverage restaking on Gearbox and how it's going to work.
Yep. Yes, leverage restaking, a new exciting thing that's coming to Gearbox. Basically, what we set on to build 3 years back was composable leverage, being able to leverage anything, anywhere, anytime. So essentially, composable leverage, composable credit, however you call it, allowing you to do anything you want. RBAs, NFTs, staking, trading, whatnot. And now, of course, it's coming to realization that leverage restaking as the hottest narrative of the town. And we do it the same way as we have always done it, with essentially account abstraction enabled with leverage. So same way as before, a user can come in, borrow more than what they have without any KYCs or counterparties, fully decentralized, no trust required, only based on math, and essentially execute some positions that the protocol has enabled. As I mentioned, those could be whatever I mentioned, plus new one coming in is leverage restaking. The way it works is you simply borrow more capital. For example, because you're leverage restaking ETH, it makes sense that your collateral is ETH and your debt is ETH, just so your position is delta neutral, right? Because you don't want to be long in, you are likely want to be farming. So for example, you come in with 10 ETH, you borrow 50 ETH, you end up with 60 ETH in your account abstracted leverage wallet. And that 60 ETH, for example, you put into Renzo, you put into EtherFi, you put into Stakewise, or whatever other opportunities Gearbox DAO enables later. And due to doing that, you get leverage on leverage restaking. Pretty straightforward. Unless it isn't, then please ask what I missed out.
Yep, got it. And so does this also mean that we get the extra points when we do such leverage restaking on Gearbox?
Absolutely. So the thing is that you can call this product a few different ways. You can call it leverage restaking, or you can call it leverage points, right? Because when you talk about leverage staking, what you usually meant before, let's say a year or two ago, is that you're leveraging on the differences of ETH borrow versus ETH staking yield, right? That's where the leverage staking position got its roots, for example, in Aave, in InstaDApp, and Gearbox, and so on. With leverage restaking, because there are no restaking yields coming from the so-called AVSs, right, that Eigenlayer has, you are essentially, as a leverage restaker, you're gambling on what the points will be worth, right? That's what everybody is doing for the past half a year. So the points of Eigenlayer. And for example, if you're leverage restaking with EtherFi, also the points of EtherFi on top of that, or Renzo's points, right? So essentially, you are not actually making positive yields at a given point in time. You are gambling to an extent, sorry, wrong word. You are paying a higher borrow fee because you think these points are going to be worth much more. So it's less of an obvious leverage staking position to take, and more so I am paying a higher rate today because I think this points will be worth much more. And of course, with Gearbox, you can get 10x the amount of points. So you correctly said what you meant there, yeah. Leverage points is another way to explain it.
Got it. And like, what about the risk, or are there any downsides on this end?
Actually, I mean, keep in mind we are biased, right? We work on this every day for 3 years, so we have a level of bias, I would say a pretty strong one. But comparatively speaking, let's start a bit from the beginning. When you talk about leverage or credit, there are a few different ways to get to a position. You can, let's say you want to get exposure to Spanish real estate market. You can buy a house, you can buy a company that is managing houses. Essentially, if the houses are worth more, so is the company. You can buy a real estate index of Spain and so on. So different instruments, right? And the eventual exposure is pretty similar, but risks and the path to that is very different. similar to, let's say, Gearbox, Whales, Market with Points, Pendle, right, and a few other opportunities. Actually, they're still limited these days, right, because it's fairly new. So when you talk about buying points, you are literally paying for a point, right? You have a static price and you buy it at. That's it. So it's like a trade, right? It's like very straightforward. And you pay to an extent upfront. When you talk about Pendle, you split your yield between PT and YT, right? The principal yield and the yield bearing token. So as Pendle correctly points out, if you hold the yield bearing token, it's likely to expire in 0, but you get more points because of it. So the Gearbox, it's slightly better to an extent. You still get the leverage points, so you get what you want. But at any point in time, if you want to exit the position, it's very cheap to do so. Because what happens with Gearbox is you, let's say, borrow ETH at 5x or 10x. You buy that leverage restake in wrapped asset, let's say EtherFi or Renzo, and you hold it. That's it, pretty straightforward, right? Because you're holding those projects already reallocate some of the eigenlayer points and their own points. But if you want to exit the position, you just sell it. And usually that is much easier to sell that than, let's say, sell points OTC, right? Or sell YT of Pendle on the secondary market. It's basically, we think it's a less risky way to do so. But again, I'm not a math guy, so would give it to Ilgiz to say what his opinion is on what the opportunity and the risks are.
So risk of depegging of asset, I guess, one of the main risks here. For leverage traders, as we can remember from LSD market, there is few price drops before Ethereum enabled withdrawals. As you remember, it's in 2021, I guess, STS faced with such kind of problems. So here it's a bit better situations because Eigenlayer already allows withdrawals, but still it has lock. Yeah, so it's like 7-day period before withdrawal. So there could be different fluctuations of the prices. There could be short term, so I guess there will be like buy pressure if price drops below some level. But still, like such kind of risk exists when you have leverage, and you should be careful using leverage.
Got it. Right, so I think the ETH price is one of the more important factors to look at, right? So when Ivan, you mentioned earlier about exiting the position, right? So when we sell the position, would we, assuming the ETH price stays constant, right? Like, would we be getting back roughly about the same amount of ETH that we bought it for and still keep the points? Is that right?
So there are two things there. First of all, even if the whatever derivative you are holding, right? Let's say this EtherFi or Renzo stays at the same price, you still have paid the borrow rate, but that borrow rate is not static, it is volatile, and it is applied pro rata, essentially like any lending protocol, right? So let's say if the borrow rate is 12% for a month, you paid only 1% of your position size. Pretty fine, right? Like you don't lose that much. So taking slippage and other factors into account, you don't lose that much by exiting the position. You only need to, basically, I don't think that is the rate, personally, I think, is not that much of an issue. What could be an issue is the secondary market price of that liquid restaking derivative, meaning easy ETH of Renzo, right? Or the wrapped or non-wrapped ETH of EtherFi, or let's say stake-wise, right? And so on. So those could be a bit more volatile because those things are fairly new. A lot of people have entered those markets and a lot of them could be exiting at the same time. If, let's say, I don't know, restaking loses its hype and so on, right? So similar to, remember, fears of STETH depegging during 3AC liquidations, when people thought like STETH would not be 1-to-1 to ETH, but like 0.85. At some point, it got to 0.93. So those things happen. Those markets are just fairly liquid. They're fairly deep. And those risks, I would say, are most likely momentary rather than structural, unless, of course, either of those protocols is hacked. But again, if you are using any other avenues to do this, a hack is probably much worse off to you compared to what you would get in Gearbox. So Gearbox risks are either standard or even more safe compared to the alternatives.
All right, got it. And I may or may not have heard about a certain strategy, right, regarding these points arbitrage on Gearbox and Whales Market. Do you want to share a bit on that as well?
That's a very interesting one. Ilgiz, I'll let you do this one, so I shut up for a second.
So yeah, like the questions, I guess, like how to price, how to understand what kind of price of points that you receive for holding different leverage positions. Yeah. So in Wales markets, there is like secondary market for these points, and there is some external market to price it. A bit similar how I have, I guess, price tokens that not launched yet. So it's a bit prediction market here. So there is like also like pendle leveraging where you have some fixed rate and you should pay it. And as opposite, you can understand how much you pay to get these points and understand like what's the price you pay for this, for acquiring these points, and actually understand like how much you sell your money in this fixed rate to get some points. Yeah, and Gearbox is like similar, so it's borrow market. You have leverage, you get more points, and you pay for having this leverage position to liquidity providers. And like how much you pay and how much points you receive as in result, actually, if you divide one amount to another, we can understand the value of like one Eigenlayer point or one, I don't know, Renzo point, SLP point.
Okay, got it then. So you just can kind of look at both Whales Market and Gearbox, right? And then kind of compare like what is the better option, I guess. Like so like you can kind of leverage the points on Gearbox and then try to sell them off on Whales Market if you think the price is good. Is that right?
To an extent, yes. The efficiency of executing such a strategy would depend on how much collateral you would need in either place, right? In Wales market to sell, I think you need 2x the collateral size that you are selling. So it's like the efficiency of basis trading strategies. If you're trying to basis trade and do the rates on funding rates on short and long between the different exchanges, is the question of how much collateral you need to put in. Of course, because there you do it with leverage, the position is likely to be efficient. The strategy, I mean. Here with Wales market, it probably becomes very efficient with a large discrepancy. So with a large discrepancy in price, with a small discrepancy, it might not be as efficient. But again, that's up to everybody, right? Some people might think that it's efficient even with a little discrepancy. That's really up to them. But it's exactly as you said, yes. Just
Okay.
compare it to basic trading. Different avenues, same asset, different pricing. And you're just trying to essentially arbitrage it to an extent. That's the idea.
Got it. Right, then I think that's that on the restaking segment, right? So we chat a lot about margin trading in the last call. I believe you guys have rebranded that under a new name called Pure, Pure. So how has Pure been performing for you guys?
Excited about it so far. So the idea of Pure is that it is pure leverage, like the word says, right? Purity, pure leverage is that you do not have any synthetic assets, any derivatives, anything else. When you margin trade with Gearbox, you take real ETH and you sell or buy that real ETH. You take real USDC and you trade with real USDC. And you do it on secondary exchanges being AMMs like Uniswap, Curve, and Balancer. So it's not like some virtual AMMs where you are trading against the house, you are trading against LPs. No, you are trading with real assets on real AMMs. And if you are trading well and making money, LPs of Gearbox are actually happy with you, rather than comparatively when you trade against your LPs with, let's say, perpetual dexes that you have today. It has seen more than $10 million of, let's say, so-called open positions, because it's not really open interest since it's all natural, right, as pure, without any incentives or anything. The rates have been much lower compared to perpetual exchanges. So slowly it's getting there. The product proposition really makes sense, especially on mainnet, those who have a bit of larger positions, because those users appreciate safety and composability. To smaller traders who just want to gamble, we see many of those being happy with centralized exchanges in the first place. And which is okay, right? Different user bases, different preferences for products. The one thing apart from the rates and not being able to, and not needing to trade against the house that we see, another important thing that we bring with pure margin trading is that while you're margin trading, you can have your position be farming at the same time. For example, if you're shorted ETH, that pretty much means you borrowed ETH and sold it to USDC, right? That's what the essence of a position is. But since you have that USDC on your credit account on Gearbox, you can put it into Yearn, or you can put it somewhere else. So the stable coins leverage farm. So essentially, a large part of your borrow rate, of your funding rate to an extent, is paid back with that farming position. And the same way differently. If you loan ETH, that means you took USDC, you bought ETH, and that ETH you can leverage stake. So that is paying back your position borrow rates, which is very unique. You don't have it anywhere else, really.
Nice. So in a sense, you're kind of leveraging for free, like quote free, right? Like without having to pay for
Pretty much,
the
yeah.
borrow rates, right?
Yeah,
Nice.
yeah.
Interesting.
Exactly.
Right. And I'm actually excited to hear what's next for Pure. Like I've heard you guys might have some steamies coming, or maybe you guys are expanding to L2 soon. Like what's the update for Pure?
Both, actually. So we chatted to the American government about what do people like the most, and they said during COVID people liked stimulus checks a lot. I'm half joking, obviously now, but that's why our head of marketing, Tushar, decided to call them steamies. So like steamy checks. Essentially, if you do something, you get steamies, which is the same way it was designed, right? So that is launching in a week from now, approximately, right after leverage restaking. The goal of the program of the initiative isn't really to just give free money away per se, but just to reward users who are returning, who are coming to use Gearbox, and who are profitable. So you probably wouldn't be able to make millions of dollars just of like sibling the system. But if you're a user who takes a long short position, adds collateral, invites their friends with the referral and so on, yes, you can make more than you should, or like if that you could. And of course, whatever your position, the performance is next to the P&L. So P&L plus gear rewards on top, that's the idea. It's really positioned more as a loyalty program to make user acquisition a bit easier. But I think anybody on the project side these days would agree that trying to get the user base simply by overspending is a very difficult task, because every one of the rollups, right, that pops up these days is overpaying for a user by, let's say, 10 times than the previous one. And that cost per user acquisition just accelerates so fast that you just cannot keep up. So if you're a new token, you have the chance to bamboozle your users. If you have a liquid trading token like Gearbox has since like 2022 or 2021, even I forget what it is, then you can't really play that game. Which you don't need to actually. Just need to push it with the better product, with the better integrations, with the better safety that we have been trying to do. And as for layer 2s, yes, everything essentially is ready to go to L2s. There are a couple of things in the audit just need to be checked out. But they are not core. They are rather supportive functions of the protocol, and expecting to see L2s at the beginning of Q1.
At the beginning of Q1 or Q2?
Sorry, I lied. At the end of Q1, beginning of Q2, you're correct. Yes, let's say end of March, beginning of April. Seems like a decent timeline, at least based on what we hear from devs.
Awesome. Are you able to share which L2 specifically?
Depends on two things, probably. One, of course, the Gearbox DAO voting on what that is, and the second one being on where the most interesting integrations with other protocols on a given chain, on a given rollup, and the incentives to drive user traction essentially there. So depends on those couple of things.
Got it. And rolling back to the steamies, was the timeline shared on steamies? Like when can we expect that?
In a week or in 2 weeks from now. So essentially by the end of February for sure.
Okay, got it. And I think that's all that I had planned to cover today, right? Is there anything else that you guys want to touch on?
Yeah, I guess we can say more about gauges. Actually, in Gearbox, it's like if you compare different lending markets, there is actually situations that when you as LP provide capital, it doesn't matter how this capital is used, what kind of collateral is used to borrow it, what kind of strategy other side is used. you actually will be rewarded the same rate. Yeah. So for example, you provide USDC. If somebody borrowed it using Ethereum as collateral or some shitcoin as collateral, they will be the same supply API paying for you. We think this not very good, well designed. Regarding like I am liquidity provider and I got different risk here, and actually I should be rewarded in different ways for providing capital in different risk strategies. That's especially crucial when we're talking about Gearbox design, where this capital could be used not only for like borrowing, trading, but also for different farming opportunities, staking, liquid restaking, and so on, what we discussed before. Yeah. So there is like gauges where gear stakers could vote to downgrade to upgrade borrow rate for different quotas. And when you use your credit account, you actually like buy this quota to use this kind of asset as collateral inside your credit account. So for example, you wanna go leverage stake, so you wanna have staked Ethereum on your credit account, borrow Ethereum, and you wanna have staked Ethereum as collateral. In that case, you should buy quota for staked Ethereum, pay this quota rate. And quota rate is defined in gauges depending on votes of gear stakers. So like liquidity providers, DAO members, they have incentive to increase this rate. Other side, like leverage users, leverage stakers, they wanna have downgrade this side. So like there is some game theory inside it. Different parties have these different incentives, and as a result, there will be some equilibrium to define fair pricing. That's fair, market situations as a result of this game for different parties.
Oh, that's interesting. Right. Then where does the base gauge start from? Who decides what percentage it starts from?
Initially, like this interval, like minimum rate and maximum rate inside gauge is defined by gear governance on snapshot voting. But later, like different parties who stake into gauges their gears, they can vote to downgrade, like or upgrade price. So there is like two parties. Yeah, first group of people want to downgrade. Second group want to upgrade it, and as a result, like some equilibrium, some math formula is applied here, depending on the ratio of downgrade and upgrade groups votes. Resulting rate will be defined inside this interval.
Got it. So like through this voting, it will kind of move the rates to where the participants think it's a fair interest rate for that specific vote. Got it. That's interesting. And is this live yet?
Yeah, it's fully live with V3, already a bit tested. There is some interesting use cases already where like for leverage staking, where actually rates changed from what initially is set. So yeah.
Got it.
Interesting that there is like different parties who came into gauges and trying to vote to increase their own strategy rewards, I guess.
Got it. Like just a curious question on my end. Do you foresee like if there's a specific whale or like large player who could potentially shift the rates in their favor because they have so much more voting power?
Yes, of course, it's possible. I guess it's like similar problem with CRV in Curve. Yeah, of course, there is like some big parties inside CRV ecosystem, and actually, if they decide to distribute more CRV liquidity money rewards to some pool, actually nobody can beat them, I guess. So here we actually think that as a result of this system, there will be some large players, maybe some projects on top of Gearbox Gauges will appear that could acquire this voting power to define different rates and different strategies.
Right, got it. Right, and I understand you guys are exiting your alpha test soon, right?
Is there any planned date for mainnet to go out yet?
So the alpha basically referred to the stage when V3 was there and contracts are basically done and audited, of course. They're as safe as we can possibly make them. But of course, after deploying a new version, you have the interface that needs to be synced up. You need to fix some bugs, right? Some other things that pop up. So we have done a lot of that extensive, countless hours of work since the mid-December, essentially. And of course, before that, but that was the alpha stage in mid-December up until essentially end of February. So in a week or two from now. And that will coincide with the launch of Leverage Restaking next Monday, Tuesday, and Steamies a few days after that. So we're pretty much almost out of it.
Got it. So when you're mentioning next Monday, Tuesday, you're referring to 19th February.
Yeah, so 19th or 20th of February should be Leverage Restaking launch with EtherFi and Stakewise. Renzo to be voted on because we're waiting on the Redstone Oracle. That should be, let's say, a few days after that, hopefully. And Steamies for pure margin trading, meaning the points, right, and all of those extra incentives. Let's say Monday 27th. Oh, wait, sorry. There's going to be 26th, right? Approximately that. Yep. So let's say Monday 26th.
Okay, got it. Great. Now we have some dates to look forward to. Love that. I think that's all from my end. Anything else from you guys?
Yep, that sounds good. Thank you for these super relevant questions and having us on again. Appreciate you taking the time. And apologies if some of the things we said sounded too complex. Always happy to async, explain it in text or in voice. It's just that we see this stuff every day for the last 3 years. So we get high on our own supply, as they say, right? Not getting high, though. That's not what I mean. But like, it is a phrase, yes.
Yeah, so you guys, if you guys have any questions, right, feel free to drop them in the comment section in the Twitter or on the YouTube channel, right, and I'll try my best to get them to answer the questions as well. And thanks, Ilgiz and Ivan, for taking the time to come on to update what Gearbox V3 has been working on, right, and of course with the pure trading and the leverage restaking as well. So as usual, all the links will be in the description box, right? Highly recommend you guys to check Gearbox out. And that is all we have for this episode. We will see you in the next episode.
Thank you.
And that brings us to the end of this episode of Moose Meets. I hope you enjoyed learning more about them as much as I did. Let me know which other projects you would like to learn more about in the comments down below. As usual, do remember to hit the thumbs up and subscribe to the pod. We will see you in the next episode.